Hey. Tonight we are going to discuss how to buy a house in 2026, even if you say, Kevin, rates are high. Listen, if any other night you have not gotten a pen and paper to write things down or something in your phone for notes, you're going to want to do it tonight. I am going to break down how you should get started right now if you need to, and I mean right this second, to prepare for 2026. You've been waiting, you've been trying to time the market, or housing prices going down, or interest rates going down. Why? Why am I waiting? Why are you waiting? Oh no, my uncle says no, don't buy a house. Oh, my friend lost their house. Oh, they said their interest rates are going, their payment went up. Like, calm yourself. Forget the noise that you hear in the background. I don't care what anybody says. Home ownership is the beginning stages of wealth. Generational wealth, what they do after us doesn't really matter to some people. But for us, we need to set something up for our next generation. So, example, the percentage of the average homeowner who owns a home has a net worth of $400,000. The average renter has a net worth of $10,000. So don't tell me home ownership doesn't begin generational wealth. Listen, understand that I give you real and raw information. I don't try to sugarcoat it, and I don't try to make it pie in the sky by and by. What will happen is your mortgage payment will go up. It will go up because taxes and insurance, which are things that we cannot control. But if you have a 15, 20, 25, 30-year fixed mortgage rate, your principal and interest does not increase. Your property taxes increase. Your homeowner's insurance will eventually increase. And that itself is going to make your mortgage payment increase. So anybody watching this live and they purchase a home and their payment goes up, I don't want to see any TikTok, Instagram, or YouTube videos saying, hey, I didn't know my payment was going to go up. It is going to go up at some point. Majority of you want to live in better areas, better school districts for your kids. And with those luxuries and amenities that you want as well comes with a price. The price is increased taxes. Homeowners insurance is a little bit different. Homeowners insurance increases basically because they have the ability to increase a couple times a year. It has to be approved in Georgia, but they have the ability to increase. And sometimes those increases are because people are utilizing homeowners insurance because of theft, because of, disasters, and, claims, all of those things. Car accidents, all of those things make homeowners insurance go up, as well as car insurance. So we're going to discuss tonight how to position yourself to purchase a home in 2026, right? We're going to do that. So you need to have your pen, your paper, and everything. And if you got questions about anything I say, or if I don't mention your question, drop it in the comments, in the chat, and let's go. So the first thing you need to do, and as many times as I've said this over and over and over, these documents that I'm about to tell you need, start working on getting them. You guys, I appreciate you doing business with me. I appreciate you reaching out to me, wanting to get a consultation and seeing how much you get pre-approved for, but we're still running into the same issue, which is not having or knowing what documents that you need, even though I give you a list when I send you the email, and the list is also in the application. You want to get around and say, oh, I can't find it. You're going to have to find it and provide it. I cannot, as a professional, give you an estimate for hundreds of thousands of dollars and you can't give me your bank statement or your pay stub so I know how much you make and how much money you have. We're not judging you. We're not looking to try to not get you approved. We're trying to help you get approved. So that beginning phase and step is for us to say, hey, this is what you need to do to be in position. I understand you may not have, let's say you got $1,000 in the bank. This is what we're going to need. Without knowing that about your specific situation, we're never going to know how to get you from renter to home ownership. So listen, first thing we need is, if you are a W-2 employee, we need your most recent 30 days of pay stubs. And let me preference this. No screenshots of the pay stubs, no pictures of the screen of the pay stubs. We need to have them in PDF form, which you can typically log on to your payroll site and download them to your computer, and then attach those two documents, or whatever they are, if you get paid weekly, to the email and forward them to me, or attach them as you do the application, or whoever's application you do, right? The next thing we're going to need is the 2 most recent months of bank statements, all pages, all schedules. You cannot black out your account number. You cannot cut out your account number. You cannot leave out your account number. We're not here to get money from your account or use your account. We're here to make sure that we have access, that we can see where your funds are coming from. And when we ask you to wire your funds to closing, that they go to the attorney's office and it comes from that account number, so we can verify everything. That's what we want. We're not trying to take any money from you. We're not trying to get $7,000 from you because we're giving you $192,000. Everybody in a $200,000 house. A lot of people are scared. I know you feel like you might get scammed, but we're not in the business of trying to get a couple dollars from you. We want to loan you money, but we want to also make sure you have the ability to contribute the funds that you need. All right. Again, if you're a W-2, we need your 2 most recent years of W-2. So as of right now, we need 2024's W-2 and 2023's W-2. And let me kind of go back, because I'm going to go deep with these documents for my crowd. If you are retired and you receive Social Security and or disability, we need your Social Security or Social Security Disability Awards letter. The most recent one, not the one from 1929. Yeah, I said 1929. Not the one, from 3 years ago. We need the one that says what you're going to be making and what you're making in 2025. All right. So if you receive VA benefits, we need a copy of your VA benefits, how much money you make, whether it's retirement or disability. How you doing, softer side, Chanel and Miss Jones? I appreciate you ladies for being out tonight. Also, if you receive any other types of income, pension, we need your pension statement. So, child support, we need your most recent child support court order. And just while you're at it, get a list of the last 12 months of child support payments. If you receive Social Security for a family member and you take care of them and you're the guardian and it comes in your name and their name, get a copy of that paperwork as well so we can have it. If you have a 401k, and that is where 2 things. If you have a 401k and that is where your funds are coming from for closing costs, we need to, or down payment, we need to have a copy of the most recent 401k statement. That's the first, right? Second part is, if you have a 401k and let's say we don't necessarily need your 401k for down payment and closing costs, still provide it anyway. I'm gonna tell you why. Because that could be the showing that you have reserves could be the difference between you having the ability to buy or qualify now and you not being able to qualify. Because what happens is the 401k, let's say it says, hey, I've got my down payment and closing costs taken care of. However, if something were to happen, I have the ability to tap into my 401k and pull out some funds to make sure I have the ability to make my mortgage payment. That's big. That's a win. Like, so if you have it, still provide it. If you don't know how to access it, learn how to access it so you can grab it, because we're going to need it. And another thing, while we're talking about 401k, right now is renewal time for benefits for most employers. If you are not contributing to your 401k and your company matches, contribute to your 401k and let your company match, or whatever contribution they do. That is, in a sense, free money. It's tax free in the beginning, and then your company matches, and you want to make sure that helps you save, right? Again, you may have your down payment and closing costs taken care of, but that 401k could help you with the lower credit score and show, hey, I do have extra funds available to me if I need them. So it is huge. If your employer is giving out money or to help you build, why not take advantage of it right now? See, what happens is, and I was like that as well, younger. I was afraid that, hey, oh my goodness, they're going to take this money out of my check and I need it. But you don't typically use what you can't see. So you'll never see that money because it's going directly to the 401k. And then it's your owner of the company, or the company is matching it. So just take advantage of that opportunity to begin investing. And that's another way right now to build wealth as well. 401k. And when we get the 401k statement, we need all pages of the 401k statement. Again, just like the bank statements, no account numbers or anything crossed out or blacked out or left out. We need a copy of your driver's license, unexpired. We don't need the back, we just need the front. If you're a permanent resident, then we will need a copy of the front of your permanent residency card and the back of your permanent residency card. We need two forms of government ID. So the other one's going to be a social security card and or your passport. I know I'm taking a lot of time to go over this, and I go over it pretty frequently, but people are still coming to us and coming to me and not knowing how to access those documents or providing them. And I'm not saying, hey, don't reach out to me and talk to me until you have them, but be looking for them. You know, sometimes you moved. It may be stuck in storage. And you got, hey, Kevin, I don't know what happened to those things. It gives you an opportunity to look for them. But I want you to keep, this is important. Put it on your refrigerator, on your desk, on your mirror. But if you plan on purchasing a home, you're going to need these documents. And there's no way around it. Because you don't want to come up with them doesn't mean that we're not going to ask for them. All right. If you are self-employed and you receive 1099s, we're going to need a copy of all your 1099s for the last 2 years. And also we're going to need, whether you're 1099 or just straight up self-employed, we're going to need a copy of your 2 most recent years of tax returns. All schedules. All right. Hey guys, I definitely see your questions. I'm gonna get to them. But I got a few more things I want to touch on before I start answering questions. So you can drop the questions below, and I will make sure I get to them. All right. So the next thing that I would want you to do is, again, be familiar with what's on your credit. We do care about credit score, but right now I want you to be familiar with what's on your credit. So go to annualcreditreport.com and pull all three of your credit bureaus: TransUnion, Equifax, and Experian. And you want to take a look at what's on those credit reports. You want to get you a highlighter. You invest in some highlighters, and you want to highlight what you're familiar with one color, and the things that you're not familiar with another color. Familiarize yourself with what's on your credit report. Yes, I says the lenders, we're going to take a look at what's on your credit. And I know I'll give you a game plan and we'll discuss it. But a lot of times I have people say, oh, I didn't even know that was on there. And it's because we're afraid. We know we made mistakes and we're afraid to see what's exactly on our credit report. And we're afraid to take a look at it. And we know it's bad, but we're afraid. And the only way to overcome that fear or to figure out what we need to do is just take a look at it. Happens to the best of us. We've all had some issue with credit at some point in time in our life, but it's not stuck there forever. Whether you've had a bankruptcy, whether you had a repossession, foreclosure, garnishment, lien, judgment, whatever it is, collections, we've all late payments, we've all ran into some sort of issue. So get familiar with what's on your credit. So when you talk to the lender, you have an idea what's on there, and then you and them, you and your lender or the lender can work on a game plan getting those things off. Right? So what we're going to do is we're also going to apply. We're going to reach out to a lender. We're going to reach out to a lender and we're going to apply. And we're going to apply, and the lender is going to give you a game plan. Most lenders should give you a game plan. Now, what I want to also say is I'm going to backtrack on something I said maybe 3 years ago. And I said, hey, and I agreed with my partner who I was doing the video with. And I said, hey, you should reach out to 3 lenders and see what you can get. I'm going to backtrack and say, don't do that. The reason why is because I'm seeing people go to 3 lenders and then they waste the time of the lender that gives you the game plan. And also you go to a lender who isn't willing to help you. And then, which is typically like credit unions and banks. And then you get discouraged. You also go with an online lender. And when I say online lender, the bigger ones that you see in commercials, if you're a veteran or, rhymes with Pocket Mortgage, and then they don't give you the best service and then you complain about it. Or you try to go at the cheaper of the services and they don't give you a game plan. I see you, Miss Jones. I see your comment. It's a matter of opinion, right? And, we can discuss it. But the reason why I've backtracked on saying that is because these people are not helping you. When you go, they're not helping you. And when you look for the cheapest service, you get what you pay for. And then I see a lot of people in comments complaining about the lender did this, the lender do that, they didn't do this, they didn't do that. They're in it for numbers. This is a numbers game to them. How many leads can I get and go through? I don't have to help Miss Jones because I'll never see her and she don't know where to find me. So I'm not going to give her a game plan. And I don't need to help Stacy. Oh, she got 700 credit score. Okay, now we can help her. Like, they're not typically in it. And I think you should stick with one lender. And if you're getting this level of service and the answers that you need, why shop around? Right? Why shop around? If it's me, cool. If it's not me, cool too. Right? I'm not saying, oh, just come to me. But what I'm saying is that particular lender's game plan may be totally different than the other lender. Now, once you've gotten pre-approved, and if you're not happy with your service that you're getting or happy with what you're getting in terms, then hey, by all means, you can go shop around. But if you're coming to somebody with a 560 credit score saying, oh, I'm not getting the service that I want, and oh, they can't approve me. If you don't have any money, nobody's going to be able to approve you with a 560 credit score. You've got to have some skin in the game at that point. You qualify for no down payment assistance programs with those type of scores. So that's why when you go to certain lenders and they don't give you a game plan, they just say, I can't approve you. It's because they don't want to waste their time qualifying you and then you going somewhere else. So they're protecting themselves just like you trying to protect and do the best for you. Right? So we're going to go to a lender. We're going to stick with that lender. And if it's this actual service, it's the game plan. Follow the game plan. Now, if you end up in new construction and your lender can't beat the new construction, then hey, that's understandable. New construction's offering crazy deals right now, but you got to qualify for them. They typically don't do down payment assistance, so you're going to have some money in your pocket if you're going to a new construction lender. Again, guys, let's kind of reset the room. We're discussing how are we going to go from renters to homeowners in 2026. I've went over what we need in terms of documentation, what we can have, what we can't have. And then I talked to you about going to a lender. Also, we talked about how to pull up your credit report. That's annualcreditreport.com. Not free annualcreditreport.com, but annualcreditreport.com is where we're going to go to take a look at our credit report just to get familiar and familiarize ourselves with it. Right? I'm going to say before you go to a realtor, you should go to a lender. And I say you should go to a lender. The realtor's not going to show you any property. They're not going to show you any property until you have a pre-approval letter. And the other thing is, guys, and I say this because I love agents. You know, I work with agents. They help provide leads for me. All agents are not created equal. You're going to have the same way that they're interviewing you. You have to interview them. You have to interview them. I have a story where I was working with a buyer. The buyer went to the realtor who was an associate of theirs, and they referred them to their preferred lender. Their preferred lender could not pre-approve the buyer, the potential home buyer, and then never gave her a game plan. So she reached out to me and I gave her a game plan to work on. And we worked on that game plan for 9 months. She got back with the real. She got a pre-approval from me. She said, "Hey, I'm working with such and such," and I said, "That's fine. The realtor you choose, you choose. I work with anyone if they're willing to work with me. If you don't have a real estate professional, I can refer you to one." She went back to that realtor. I spoke to the realtor, gave the realtor the buyer's pre-approval letter, and the realtor sent her to another lender, her preferred lender, because she doesn't know me. So the buyer told her, "Hey, I want to work with Kevin." Mind you, the realtor would not give her a consultation, would not talk to her until she went with her preferred lender. The buyer went to her preferred lender, and he tried to talk her out of using down payment assistance. Told her, "Oh, nobody uses down payment assistance programs," and discouraged her. She calls me on a Sunday in the evening, frantic, like, "What am I supposed to do?" And then she told me the whole story. And I said, "Well, what about your buyer's consultation?" She wouldn't give me a buyer's consultation until I got approved with her lender. Well, her lender didn't approve her then either. And then her other preferred lender wouldn't call her back. Mind you, her first preferred lender wouldn't give her a game plan. So I said, "Hey, if you allow me to refer you to one of my realtor partners, I will make sure we get you into your house." October 8th, 2024, she closed on her house. Not only did she close on her house, she closed on her house using down payment assistance. The seller paid the closing costs, and she walked away with a check. She walked away with money that she had invested into the deal. So when I say all realtors aren't created equal, I don't care if they top producers. Interview your realtor. Interview the realtor. And she even said herself, she said, "Hey," she called me Kev, "I don't think that the twists and turns that we went through in this transaction, they would have been able to handle." So again, she went to 4 lenders. One didn't give her a game plan. The other one tried to talk her out of down payment assistance. The other one did not even reach out and call her. And then the fourth one, which was me, I gave her the game plan and she closed on her home. And when we talked back in 2024, I said, "If you do everything that I ask you, you'll be in a home." And she did. So that's why it's important to interview your realtor and make sure you two mesh. So let me kind of give you a little bit more information. It's not realtor bashing. It's just why you need to interview your realtor. The real estate agent called her one time after they talked. The other loan officer who talked her out of, tried to talk her out of getting down payment assistance, she never heard from him again. And the realtor called her one time and she never heard from her again. So if I didn't stick in there and I didn't refer her to a realtor partner, she might not own a home today. So interview your real estate agents, just like they interview you. All right. So the next step is you want to make sure, and I know it's hard. Listen, I know gas prices, just things in general have increased, right? Pricing has increased. But if we're going to own a home and get from a renter to a homeowner, we're going to have to fix our budget. We've got to fix our budgets. We've got to cut out on this streaming subscriptions. the games for our kids, the Candy Crush games, eating out, the Door Dashes, the Uber Eats, the Instacarts. We're going to have to figure out how to make some more dough to pay down some of this credit card debt. I would venture to say don't even use your credit card. Unless you know how to use your credit card and can pay it off by the statement date so that you can get your points and not be charged interest, don't even use them, because you're playing Russian roulette. It's constantly increasing, and it's affecting your score. And you're saying, hey, my score keeps going up and down. And the first question I say is, are you using your credit cards? And you say yes. And I said, boom, there it is. So we're going to have to cut back on the credit cards. Even during Christmas time, cut back on the credit cards. Don't even use the credit cards. We're going to have to potentially, go in our closet and take a look at stuff that we don't use and sell it. Facebook Marketplace, whatnot, offer up, eBay, Poshmark, wherever you can sell stuff, next door. Those things are going to yield more money than a yard sale. When people come to yard sales, they look for stuff for $2 and $3. When people shop online at those other sites that I just named, they don't mind paying a little bit more, right? We're going to sell what we don't use. Like, we're going to do whatever it takes to get into a house in 2026. We're going to do whatever it takes. I've had a client who needed a car, and she's like, I'm not buying a car until I get a house. And she took the train to work, the bus to work, until she purchased her home. It's like 5 to 7 years ago. Been in it ever since and got her car afterwards. So we can do it, guys. We just got to be diligent and good stewards of what we have. If we're getting bonuses, save the bonuses. I know a client who gets disability for her child, and she doesn't touch it. It goes into an account, and that's what she's going to use to get a home for her down payment and closing costs, or at least her closing costs. So we're going to have to be diligent. We're going to figure out how we save money. We're going to figure out how to get rid of stuff that we don't use and make some additional money. Maybe we can pick up some extra shifts. This is a good time to see if you can pick up extra shifts at work, simply if you can get overtime, simply because people are wanting to take off for the holiday time. Like, we're going to have to be serious, very serious, as to game planning to get into a home in 2026. Yes, there are down payment assistance programs. Yes, this is a market where sellers are contributing to closing costs. However, you still want to be in position. Best case scenario, seller pays the closing costs. You get down payment assistance program. However, you still need money for earnest money deposit. You need home inspection fee and appraisal fee up front. So let's say that's $2,000. $1,000 for earnest deposit, $400 for home inspection, $600 for appraisal. And those are all out of pocket up front, all at buyer's expense. All right. Now I'm going to get into answering some of you guys' questions, but I wanted to make sure I went over that. Rates are coming down, not as fast as people hope, but they're coming down. Right now they're the lowest. Mortgage interest rates are the lowest they've been in 12 months. The interest rates on like credit cards, student loan debt, car payments, personal loans are the lowest they've been since 2022. So if you have purchased a car in that time frame and you think you have a slightly higher interest rate, Go to a credit union and ask what rates are on whatever type of vehicle you have and see if you can refinance. If you can refinance and save, I don't care if it's $100 a month. That's $100 a month more that you can put towards paying down some debt or saving, or $100 a month more that you can qualify for on a home. Let's be strategic. Let's be diligent, and we'll get it done. All right. So let me scroll up to these questions. Ready and waiting. I appreciate you, Miss Jones. My girl Chanel. If we had a short break in independent contract work and we were W-2 for a little over a month, does that start the 2-year continuous employment over? It does not. You'll just document that 2 years that you are a W-2. I mean, not 2 years, that time frame that you were a W-2. And then I know you guys, majority of the time, you've been independent drivers. So no, it does not start over for you. Miss Jones said it is a little scary sending all of those documents in. You're right. It is. It's your personal information. But you're asking a lender for hundreds of thousands of dollars to lend you hundreds of thousands of dollars, and they don't really know you. And I use this, and maybe you guys have heard me say it. I had a guy who didn't want to send in any paperwork and didn't want to do the application. And I said, okay. I said, sir, can I ask you a question? He said, sure. I said, if I ask you, can I borrow $20? You're going to ask me, well, what do you need it for? When I'm going to get it back? And how I'm going to get it back? I said, right. And I said, you're asking me for $200,000. And all I'm asking you is, can you afford to pay me back? What do you need it for? Which we know it's a home. How are we going to get it back? It's the same difference. When you lend your money to people and family, you want to know, hey, I don't care if you know them. Hey, how am I going to get my money back? I need my money back. That's the same thing we're doing. We're looking to see if you have the ability to pay us back, or have you extended yourself in too much debt that you can't pay us back, or how much can you afford to pay us back comfortably without getting yourself into a jam? That's all we're asking. So yeah, it is a lot of paperwork. However, it's stuff that you have and you need, and we're going to need it. We're going to need it. This is the note is a 30-year commitment on your part. We give you money up front. We give you hundreds of thousands of dollars up front, and it's your commitment to pay us back in 30 years. Which, and on that tip, mortgages are the longest mortgage for FHA, VA, USDA conventional financing is 30 years. Most people don't stay in a mortgage for 30 years, right? Typically, they move between 5 and 7 years on average. Or sometimes in that time frame, you refinance. So people are afraid of that 30-year commitment, but there's also ways that you can take that 30-year note and pay it down in 22 years, 15 years. You know, I'm going to be doing a video on how to pay your house off in 7. So, you know, that commitment, and that helps you save money and still accomplishes the goal of having the lowest payment for the longest period of time, but having the ability to pay that off. Let me see. It's a little scary with all those docs. Miss Jones said, what? Shahida says differently. She gonna get you. Yeah, she probably is gonna get me. But that's what I'm running into with buyers. So we can talk about it. We can have a professional discussion about it. That's my girl anyway. Yeah, the realtor. Yeah, I would say that too. I was a little bit upset. I'll be perfect. I was upset because I took my time to work with this buyer to fix what she needs. And she said she told it, and she's like, hey, if it wasn't for Kevin, I wouldn't even be in this position, because your guy did not give me a game plan. And I called Kevin after I talked to your guy. And the realtor didn't care. because she didn't know me. So it doesn't matter to her. And obviously it didn't matter to her whether this buyer owned the home because she called her one time after she talked to her lender. So, it's this, it was a selfish, and she got what she deserved, nothing. She got nothing out of the deal. Another agent was able to be blessed and to be able to bless my client, and they become, great buddies. So you got to watch who you work with on both spectrums, lenders and buyers. Lenders and realtors. Gonna save this live to my playlist. So pay them off and don't use them at all. Depends, Stacy. You may not have to pay them off all the way. I'm just saying don't use them. Like if your goal is to purchase a home from this point forward, November 2nd, 2025, don't use those credit cards because it's just going to get you in trouble. Whether you need to pay them off or not is all going to depend on if what the game plan is with your lender and what kind of credit card debt you have. The goal at some point is, yes, to eventually pay off the credit cards, right? But you don't necessarily have to pay them off before you purchase a home. That's a part of getting a game plan from a lender. Yeah, we got you, Chanel. Nah, you don't have to start over. Now, if it was in reverse, if you were a W-2 and then you went to be a 1099, depending on your career, what you do, it may be 2 years. But in your case, let's say, example, you went from W-2 as a truck driver and then you went 1099. We would just need to have 1 full year of you being a 1099 truck driver to go at that W-2 job, and then a copy of 4 years of tax returns. But the way that you guys did it for a short period of time, nah, it doesn't start you over. You're right, Stacy. I mean, not Stacy. You're right, Miss Jones. It doesn't make it less scary. It doesn't. It doesn't. The whole process is scary. Getting your credit pulled, getting denied, not knowing if you're going to get denied or approved, sending all your documentation. Like the whole process is a scary process. Never spent this much money in your life. But just know that's a part of that interviewing your realtor, and I mean your loan officer, not say your realtor, but your loan officer, to make sure you're comfortable with the person. But there's no way around it, and it'll be okay. You got it. You got this, Miss Jones. It says, do FHA conventional USDA loans allow you to buy a modular home or build on your own land? Yes. So not all lenders offer those programs. However, a shameless plug, I have the ability to offer you what's called a one-time close construction loan. And we can do it if you use FHA, VA, USDA. Now, I do want to tell you, if you build on your own land, you're not going to be able to get down payment assistance. So if you are looking, and I'm not just talking to you, Chanel, I'm just talking to anybody watching this out on YouTube land. If you're looking to build new construction on your own land, you're going to have some sort of funds in the game. If you already own the land, that in some cases it will potentially take care of your down payment. But just know that you're not going to get down payment assistance with that. We got Chanel and Coco Chanel. How much money should you have saved before applying? That's a good question. There's not necessarily a number that we can give you. The reason why I say that is because we don't know if it's going to be a $200,000 house or $700,000 house. And what you'll need for both of those scenarios is going to be totally different. At minimum, if you don't have anything, at least you can talk to a lender, go through a consultation, get pre-qualified or pre-approved, and then they can say, hey, if you qualify for $350,000, you don't qualify for any down payment assistance program, your down payment is going to be X amount of dollars, closing costs going to be estimate here, and then you'll know exactly how much you'll need. That's on the worst case. Over the course of that time of saving, you may end up doing something, increase your score, or where you qualify for down payment assistance, and or the seller may be in a position to contribute to your closing costs, which is going to depend on each property is going to be different. So then what you'll need will totally be different. I like to prepare people for the worst, or at least have a game plan so we know how to execute and get you from renter to homeowner if something were to fall through. So I like to have an A, B, and C conversation. Coco Chanel, I hopefully that answered your question. Please do how they pay off a 7-year. I'm 1 year in already and ready. So the way you can pay. So listen, there's a video out there that you may have seen where they say to get a home equity line of credit as your first mortgage, and then take your whole credit, your paycheck, and pay off your home. One, it's hard to get a home equity line of credit as your first mortgage, right? And then two, that takes diligence, and you have to have some sort of money, because if you put all your check into the HELOC and then pay off your bills, if you get in a jam, you may not be in position to do it. That's not the way that I'm talking about. I'm talking about making extra payments. I don't have it figured. I know how to get there, but I don't have the numbers where I can educatedly speak to you educated about how to exactly do it. But what I do know is, let's say, for instance, your mortgage payment is $1,800 a month. And on $1,800 a month, you get a bonus and you say, hey, I want to pay one additional payment towards my principal. We're paying down principal. So when you pay that extra money, you're not going to pay $3,600 and say, oh, I made 2 payments. Yes, you made 2 payments worth, but they're going to take their interest from that $3,600 and then apply the rest to the principal. And within your first 10 to 12 years, majority of your mortgage payment is going to go to interest, and a portion is going to go to principal. As time goes by, the principal and interest start to even out. In this case, you're going to take that additional $1,800 and you're going to say, hey, I like to apply this $1,800 directly to principal. What that does is it pays down the principal balance of your home. So if you owed, let's say, $201,800. I'm sorry, and you pay the $1,800. Now that leaves you a balance of $200,000. So then you're paying less interest on your principal over the course of time, because your principal balance is lower. So that's how you pay it off faster, is by paying down on the principal balance. I know people, when they get their tax returns, they pay money from that tax return on paying down their house. Someone who gets a bonus, they may take that money and pay it down on their house. I don't know the young lady, but I've seen her go through it. I don't know, probably followed the last 24 months. They budget and they take whatever's extra in their budget and they live frugally, and they put the rest towards the principal of their house so they can pay it off faster, because they know, hey, over the course of 30 years, which they're not going to have a 30-year note, they're paying it down faster, and that's less money coming out of pocket. And by doing that, you're doing a couple of things. You're saving money from paying interest, and then you're building equity in your home, along with the equity that's being built because of housing prices. Does that go for a car loan as well? Um, I should pay it off too. So yeah, it can work for a car loan as well. I remember when I was 19 and I got my car, and the interest rate was like 10%. It was first line piece of credit that I got. And I asked the guy, I said, hey man, is there any way I can get a lower interest rate? And he said, listen, if you pay your normal payment and then pay some extra, and he told me exactly what to pay on the principal balance of my car. He said it's almost like having a 3 or 4% interest rate. So you just kind of pay it off faster. That principle works for cars, credit cards, and homes. Okay, my comment showed up twice. We'll be in touch soon. Cool. So hey guys, listen, if you're watching the replay and you have questions pertaining to home ownership, comment in put your question or concern in the comments below. I answer them myself. I try to check them every day. Sometimes I miss them, but I try to comment back and respond on a daily basis. Also, if you have a question that you do not want to ask on live because it's a little in depth or personal, do me a huge favor. My link will be in the description where you can reach out to me and get a consultation. Which leads me to this. So with the consultation that I give, when you sign up on there, that not YouTube, a Zoom link will be sent to your email. So make sure if you sign up for a consultation with me that you look for it automatically gets sent to you, a Zoom link for you to communicate with me. Thanks, Stacy. Thank you. And Miss Jones, thank you as well. If you're watching this video and you're new to the channel, do me a huge favor. If you could hit the subscribe button. Also, somewhere around the subscribe button, there's a notification bell, which notifies you whenever a video goes up, or if I go live. If you're watching this video and you enjoy the information that I'm providing, and you feel like I'm providing you with great value, if you can do me a huge favor and hit the thumbs up button. I definitely appreciate that. That helps pushes it out to the YouTube algorithm. If you're watching the replay or you're just joining now, we're discussing how to buy a house in 2026. Interest rates are not in the 5s or the 4s, but they're where they should be, right? For right now. Also, housing prices are going down some in different pockets of the country, and, negotiating and having a good real estate agent who understands the market is key. I know of a situation where a buyer's pre-approved. It's a lender friend of mine, and I'm helping her with the deal, and the buyer's agent is not educated on the process, making offers on properties they probably shouldn't be, doesn't understand the financing piece. So I told the agent, hey, reach out to them and just have a discussion with them so you guys are all on the same page, because if not, it's going to be pie in somebody's face, and then the buyer is going to get frustrated because they can't qualify for a home, or they feel like, hey, I keep getting turned down. So definitely make sure you have a realtor that understands the process. Have a realtor that understands the process. Hey guys, do me a huge favor. If you're here this far into my video, obviously I'm talking or providing value. If you want to see Shahida Hill on my page, me talking to her and me interviewing her this time, drop a Shahida below. And if any of you follow her, do me a huge favor. Go to her page and say, hey, we want you on Kevin's page. And then I'm going to get her on here so we can have some dialect. And Miss Jones, yeah, we're going to talk about that 3 lenders. All right, guys. Listen, home ownership is a way to build wealth, right? It is a way to leave something for your kids, maybe not just your kids, but for your family. If you don't have kids, maybe for your nieces and nephews, right? If your kids got a house and you're older, maybe the controversy, maybe your grandkids, right? It's a way to start something. Start with somewhere, whether it's a 2-bedroom, 1-bath house or a 3-bedroom, 2-bath house. It's a start somewhere, and you don't have to stay in that house for 30 days, but it's to get you started on the way to home ownership. Everybody didn't come from a rich background. Everybody doesn't have a successful cash flowing business. There's people who buy homes that are hardworking people like ourselves, and then we build from there. You are able to buy a house, right? Stay in it, gain some equity in that property, and you can do one of 2 things. You could keep that house, rent it out, and buy another one because you're at that point, you're potentially in a better position, or you can gain equity in that house, sell it, take the equity from that house, and then buy one more to where you want it to be your final. The second house doesn't have to be your final home. You can then take that house after a couple years of equity and again, either keep it or sell it and take the equity gain in that home and buy your forever home, right? So example, you buy a small home up front or whatever you can afford, then you get the next house. And then typically when we get older, we know not, and the kids are gone, we no longer need 4,000 square feet, 3,000 square feet. We're looking for something. Hey, I'm getting older. We don't have those needs no more. I don't want to go up steps. I want a rancher, or I want something with a master on the first floor. So those are progressions. I think we have to get out of what we see posted online, with people getting these bigger houses, not McMansions, but bigger houses. And we can kind of start somewhere. Everybody isn't getting new construction, 2,000, 2,200 square feet homes, 3,000 square feet homes. Everybody's not buying that. Some people are buying condos. Some people are buying townhouses. Some people are buying manufactured double wides, and they happy because that's what they could afford, but it's a home and they can call it their own. Just let's keep it in perspective. I would love to have a super huge home with a basement. I like to have, well, I forget what Rick Ross called his place, but also what comes with those large payments costs expensive upkeep. So it's one thing to qualify for the house, it's another to be able to maintain it. Yep, Miss Jones, it's a lot of cleaning. But all that money you got over there, Miss Jones, you probably got a cleaning lady or man, cleaning company coming through. Hey guys, this went by quick. Hopefully it helped. You get things into perspective. If you're watching it live and you took notes, I'm actually going to say go back and rewatch the beginning, probably the first 30 minutes where I dove into exactly what you need in terms of paperwork. um to dive in, to the paperwork that you need, how we can save money, contributing to our 401k. I challenge you. Listen, if you work and your job matches 401k, and right now is where typically they're renewing things, re-enrollment, talk to your job about 401k and seeing how much they match. I don't think you'll miss the money that you invest into your 401k. Cool. So you know what? I'm going to make a phone call to my friend, and I'm going to see when she can give me some time to hop on this page so I can interview her and see what she thinks on the market. And then we're going to discuss the three lenders. We're going to have it from a realtor's point of view, and we're going to have it from a lender's point of view. Again, guys, I'm Kevin Jefferson, the People's Lender. Have a great night.